Hello and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I am Zach Seward. I'm filling in this week for Christine Lee, and joining me are my co-hosts today, Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Hey, how's it going? Good morning. How are things?
Morning.
Good morning.
Good. Let's take a look at the prices. Let's go to Bitcoin first. Bitcoin, hit me. Bitcoin currently at $47,763, up a smidge, 0.23% in the last 24 hours. Let's go to Ether. The CoinDesk Ether price ETX index is sitting right now at 3,545, still rallying a little bit, up 3.5% in the past 24. And lastly, we'll take a look at the DeFi market. The DFX, CoinDesk's DeFi index, is at 712.60, up nearly 4% in the last 24 hours. And those are the prices. Lawrence, beyond what we just saw, what is going on in the markets today?
Yeah, I mean, get ready this weekend when you see family on Labor Day weekend. There's going to be that uncle's me like, hey, have you heard of this thing called Ether, Ethereum, something like that? Because they're going to all be talking about it. It's had nothing but a great run over the past few days as you know, people are starting to see the coins get burned. And there's also this hot interest in NFT markets. And of course, that drives up a lot of interest in ETH. And it's driving up also to DeFi is as you see, it's on the tear. Again, also adding more interest in ETH. And that's all happening while Bitcoin has been flat. So, you know, it's just a continuation of that trend that we're seeing right now. And it'll probably happen, my guess is at least for the next few days.
Thanks, Lawrence. And Emily, what's on your radar today?
Well, there's been some reports that Twitter is going to allow users to tip in Bitcoin, which is going to be a really interesting experiment because I'm sure while everybody wants to receive tips in Bitcoin, I'm not sure what would motivate people to spend their Bitcoin on Twitter tips. You know, a lot of other companies have had trouble getting people to use Bitcoin for payments. So it'll be interesting to see if Twitter can actually succeed in this area.
Wow. Well, I mean, I'll accept the tip in Bitcoin. Emily, you want to send me something?
But would you tip in Bitcoin is the question.
No.
Oh, hell no. No way. I'm not doing that. Come on now. All right. Well, thanks so much, Emily and Lawrence. We're going to take a quick pause.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Welcome back. So FTXUS made a bid for the U.S. Bitcoin futures market yesterday when it announced it was buying LedgerX. Is this how FTX breaks into the U.S. derivatives market? Joining us now to discuss this and more is LedgerX CEO Zach Dexter. Zach, how you doing?
Hey, doing great. Thanks for having me on.
Congratulations on the acquisition. First of all, you know, crypto derivatives, it's been a tough nut to crack in the U.S. market, given its more restrictive regulatory stance for retail traders. So I guess my main question is, how does being under the FTXUS umbrella, you know, change that equation, if at all?
Yeah, I actually think there's a really consistent, clear framework for offering crypto derivatives or any other kind of commodity derivatives in the U.S. And the Commodity Futures Trading Commission regulates those derivatives. So there's a clear set of rules under Part 17 of the Code of Federal Regulations. There's a clear set of rules in the Commodity Exchange Act. And I mean, frankly, there's a fairly easy, lengthy, but straightforward set of forms you can use to propose new products and propose that you want to do something innovative in the commodity derivative space. And Bitcoin and ETH are commodities. So I think this is a very logical move. It's a logical next step. It's part of what I like to call the regulatory flippening, where a lot of these players who may have started overseas are starting to move into these highly regulated jurisdictions because that's where they think the long-term value capture really is.
That's a really interesting point about the U.S. because the U.S. is kind of known as being actually a very difficult regulatory environment. Are there any specific difficulties or challenges that are unique to the United States?
Honestly, I totally disagree with that. I think the U.S. has been fairly straightforward, especially on the commodity derivative side. You know, I think the security side, there's still some questions about how legislation there and how policy is going to evolve, and I understand that, but from a crypto derivatives perspective, when we're talking about the top 2 or 3 traded products overseas, the options, the futures, even stuff further out on the risk curve, I think that the framework is clear. It's there. It's just the industry hasn't really stepped up until today to jump into that game. And I think it's a good thing for crypto overall.
So Zach, I think there was some speculation yesterday that this was, FTX buying some of the licenses that LedgerX has accumulated over the years. Is this sort of like the license equivalent of a startup acqui-hire? What's your view on that?
Definitely not just about the licenses. So one thing that people, I think, don't know about LedgerX, we actually have 3 different licenses, and we're doing stuff with all of those licenses. We have the exchange license called the DCM that allows us to retail and institutional, the CEF, which allows us to institutional, and the clearinghouse, which is really, really tough to get. The standards are really strict. The process is arduous, but it's all very much worth it, because if you get that license, you can hold customer funds to back derivatives transactions. So we actually have an operational framework there. We're clearing for our exchange. We're actually serving as the clearinghouse for a few other exchanges, some of which we haven't even announced yet. So in many ways, we've kind of been building this, stealth business behind the scenes that I think is much larger than what's just on the website. And all of that is part of what's getting, rolled into FTXUS as part of the acquisition here. So I think it's about creating, a much bigger entity than what exists today at LedgerX, and approaching the same problems, same products with much more, financial and operational firepower.
So Zach, FTX itself is involved heavily in the stablecoin market. Will LedgerX be able to use? Will customers be able to use stablecoins in the future to settle their options and futures, or is that not permitted in your licenses?
Yeah, it's an area we're actively exploring. So I would say that at the clearinghouse level, which is really where, to get to your question, can you accept stablecoins to collateralize derivatives transactions? And I think the question is not, can you do it? The question is, can you do it without a large haircut to the value of the stablecoin? Can you do it in an economical way? And I believe that's possible. Like it should be possible to set up a credit facility to accept stablecoin deposits and then collateralize trades with the underlying dollars. Then maybe down the road, with stablecoins themselves. But that's all subject to regulatory approval.
Why would that cause a haircut to the collateral to the stablecoin in clearing?
Well, I'm actually not sure it would. I just think it's something where, again, the industry has not proposed this to the regulators, so it's not a regulatory block. The regulators are actually open to doing anything I think that's reasonable that could assist traders and more easily conducting their derivatives transactions, right? So it's up to the industry to say, okay, well, we think that, we should accept USDC or another stablecoin, and here's what we think the haircut should be, if any. And until a proposal is made, it's really on the industry to start that train rolling down the tracks.
So how are your options customers positioned? Are they bullish, bearish right now?
Well, yeah, so the most popular trade on our platform is selling call options to capture volatility. People are basically selling vol. I think that's always been the case. We have a lot of long Bitcoin holders. I think in the future the products will probably evolve and maybe go to different settlement mechanisms that are maybe a little bit more efficient. But certainly for the last 3 or 4 years, it's been selling volatility.
So, Solana obviously doing pretty well lately. Now that you're in the FTX family, are you a Solana fan? We're going to see any Sol products coming out of LedgerX anytime soon? And beyond that, just curious for your broader take on the market.
Yeah, sure. So I'm personally, without speaking for the regulated products, which are all subject to regulatory approval, I'm personally a huge Solana fan. I'm been staking for a long time. I think proof of history is super interesting. So it's definitely something to watch out for. As to whether it falls under one regime versus the other, I think those are complicated legal questions. And frankly, we've been so busy, we have to sit down and do the analysis and then shoot that over to the regulators and kind of get their thoughts on it. So I think that's the next step for any new products.
Zach, Binance had some issues with its derivative products related to equities, basically tokenizing equities. With FTX now coming into the market in the US, even more so with their acquisition of you guys, do you see potentially getting involved in, let's say, equity futures, et cetera, on their behalf?
Well, so our CFTC licenses allow us to offer commodity derivatives. So future swaps, options and futures on anything that's a commodity or a commodity derivative. So I think that's what the LedgerX acquisition is focused on. I know the FTXUS team, they have broad ambitions to get into all kinds of interesting, products, but certainly for the LedgerX piece, it's all in the CFTC world.
Are you coordinating that with FTXUS now, or is that something you guys are you going to be working actively and potentially, let's say, trying to get the license for futures in equities and other derivatives?
I think that's a question for them, really. I think, just broadly speaking, though, the FTXUS team has ambitions to become a really, really large player in all parts of the financial markets. So I think that that has some pretty straightforward implications.
So Zach,
just another question on options trading. Are you seeing more interest in ETH relative to Bitcoin?
Well, we've always been a Bitcoin platform. I think since we launched ETH options, we were really the first place to launch retail ETH options in the US, and there's been an uptick for sure. I think it's still mostly Bitcoin focused because that market is super liquid. It's been there for a while. You got a lot of holders who have been sitting on a stash and just want to sell calls. So the ETH options market in the US is still developing for sure, and there are features that we need to add, like down the road, like margin trading and other stuff you would see on some of the more traditional exchanges, just to enable more capital efficiency so that can grow further.
So yeah, Zach, I was going to ask, we saw FTX buy the Blockfolio product and then roll that into the FTX brand. Is it going to be a similar situation with LedgerX? Will LedgerX operate as its own platform, or what are the plans for integrating these two platforms?
Yeah, I think the FTXUS team has been pretty clear that for now it's going to be just operations as normal, just get up and running after the acquisition, and then down the road we'll look at, okay, how do we make sure that you can go to FTX.US and kind of plug and play the options and the futures and the other interesting stuff and do it all from one interface. So that's definitely in the long-term roadmap, but for now, business as usual for our customers.
On the back end with KYC, know your customer, AML, anti-money laundering regulations and checks on your side, is that going to be consolidated with FTXUS, or are those going to be two separate methods by which people can open accounts?
Yeah, so separate for now, and I'm sure eventually we'll probably take a look and see if we can consolidate. I just note that, for FTXUS, the reason why I wanted to partner with them is really because they've been super strong on AML KYC from day one. They've always had a program, and that's not something that I think every player in the space can say. And the fact that they've always had an effective program is even more important when you're approaching a regulator like the CFTC. You've got to have that demonstrated history of compliance. So, the fact that we're both using either biometric or kind of advanced AML KYC technology is a huge piece of this deal, in my view.
Do you think some of that will eventually spread over to FTX.com itself, or is it just definitely going to be separate for now?
I mean, it's hard to comment on like the particular platforms, but I'll just say, broadly speaking, I expect the industry as a whole is probably going to be a lot more regulation friendly down the road. I think that's really where the value is. That's where the long-term money is, the revenue, the profit, the business. So to the extent that, any player in this space can improve its AML KYC programs further, I think they're going to start to do that.
Zach, I know crypto time is a little bit like dog years, and you guys have been at it for a while now, had your ups and downs, some rocky roads, some tough patches. You seem to have come out roughly in one piece. I just wanted you to reflect on the journey a little bit as you are joining a pretty prominent brand in the space right now after, again, those peaks and valleys of startup life.
Yeah, I mean, it's interesting. Starting a clearinghouse is not something people do, and there's a reason that there hasn't really been a new one that's done much outside of clearing for its own exchange in the last 30 years or so. Really, since the demutualization of some of the bigger names out there today, SIBO, CME. But we did that, and that is naturally going to be a very long road. It's going to be arduous. It's going to be tough. And from 2020 forward, with launching into clearing for multiple exchanges, we really took off especially on the clearinghouse side. And so I think it was all worth the effort. And there's a reason that it's so hard to get up and running with a clearinghouse in particular. That is one of the most difficult regulatory challenges that I think exists under the U.S. regulatory frameworks.
Zach, just a broader markets question. This summer there were a few weeks when, trading seemed really flat and everybody was talking about summer doldrums and a bear market. Is that over? Are we out of that? Or are we out of the woods?
Well, I've always thought there was going to be a Solana summer, and that seems to have happened. So I'm happy with that. I think people are, at least on our platform, are back to selling volatility. So I think that gives you a sense of where they think it's going, right? I'm obviously not trading on there, but if I were, I'd probably be doing following the herd there. I'm not a trader, more of an operator. So I think selling vol is still the most popular trade, and that says a lot about probably where people think we're headed.
Are they just selling volatility in Bitcoin, or are they also doing it in ETH?
It's in ETH as well. Yeah, that's the call put spread is skew is totally interesting. It's all calls.
Wow, and that's
thanks so much.
And so yeah, so you're not noticing any mispricings when it comes to or at least any market sense of mispricings when it comes to puts, but it's more in the call space.
Yeah, that's right. And at this point, if there are mispricings, people kind of swoop in and take those out pretty quickly.
Well, Zach, I appreciate you guys taking the time to walk us through the acquisition. Congrats again. That was great. So thanks so much. Have a good day.
Thanks a lot. Have a good one. Bye.
Thanks. That was LedgerX CEO Zach Dexter, fresh on the heels of their acquisition by FTXUS. Coming up, we're going to check in on Asia and the crypto markets over there. Stick with us. It's First Mover. All right. Time now for the daily forecast to see what is happening in the Asia crypto markets. Here is Angie Lau of Forecast News with the latest.
Welcome to the Daily Forecast, September 1st, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. So we've been talking about this for a while now, China's blockchain ambitions in BSN, or Blockchain-Based Service Network, created to spur mass adoption of blockchain technology within the country. But its latest announcement demonstrates how that's developed into wider global ambitions. We're going to talk about that and a whole lot more coming up. All right, Red Date Technology, which China tapped to manage its blockchain-based service network, has now partnered with South Korea's Metaverse Society to offer a blockchain-as-a-service portal. The portal, which is expected to launch in November, will allow developers in South Korea to build blockchain applications. Forecast News' Timmy Shen reports from Taipei, Taiwan.
In its first expansion outside China, BSN's South Korean portal will allow blockchain project developers to fuse frameworks with chains such as Ethereum, EOS, and Polkadot. The company says its mission is making enterprise blockchain application development easy and affordable. BSN already has 8 active portals in China with a community of over 25,000 developers. And Korea is not the only place it's planning to expand into.
Our upcoming one, I can tell you, is in Europe, which we're very excited about and hope to be able to launch in several weeks. And then we're in active discussions with potential portal operators in other parts of Asia, in Europe, in the Middle East, and even some early discussions in North America.
But while BSN International will charge ahead towards major public chain integration, BSN China operates as a separate permission-based system that cannot access public chains deployed on BSN International, owing to the strict government laws and regulations in China for crypto and blockchain. Bailey says building partnerships with portal operators around the world is key to the expansion strategy. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
Meanwhile, looks like there's no let-up in demand for cryptocurrency mining rigs. China-based Canon, one of the world's biggest manufacturers of Bitcoin mining machines, has just secured a huge order from Genesis Digital Assets. The initial deal is for 20,000 machines. But there's also the option of purchasing 180,000 more. That's a lot of confidence from both in the outlook for the mining industry. Forecast News' Carolyn Wright has more.
Genesis Digital Assets say the deal forms part of their plan to rapidly scale operations in North America and the Nordics, with a focus on using renewable energy. As of August this year, Genesis had a data center capacity of 170 megawatts, which it says translates to a hash rate exceeding 3.1 exahashes per second, or just over 2.4% of the global Bitcoin mining hash rate. The mining company says its ultimate aim is to increase capacity to 1.4 gigawatts by the end of 2023. Looks like the big bets on crypto mining are set to continue. For Forecast News, I'm Carolyn Wright.
And finally today, more developments in the play-to-earn gaming space in Asia as the trend gains speed. A Korean mobile game has gained global popularity since it added blockchain features just a few days ago, its tokens gaining 200% in just the 24 hours going live. But get this, those very features also means it's now banned in its native country. Mir4, a massive multiplayer online role-playing, or MMORPG, game developed by WeMade, only made its global launch on August 26th. A large part of this popularity comes from allowing users to trade their in-game earnings into tokens and NFTs that can be cashed out to use, of course, in the real world. So where's the native fan base? Well, that's the thing. These popular new features are not available to Korean players because Korea's Game Rating and Administration Committee refuses to give age ratings to any blockchain-based game, which means those games are not allowed to be released in its native country. Regulators fear the games could encourage speculative behavior, while the government is still unclear on crypto as an asset. You know what they say, it's all fun and games until, well, that's the part Korean regulators are still trying to figure out. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
Let's take another look at the coin, shall we? The CoinDesk Bitcoin price XBX index is currently at $47,498. Let's go to Ether. CoinDesk Ether price ETX index is currently at $3,527. And lastly, let's go to DeFi index. CoinDesk's DFX is currently sitting at $710.57. Let's pause now for the CoinDesk Spotlight.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
SEC Chair Gary Gensler stirring things up again with cautions for the crypto market. In an interview with the Financial Times today, he said the crypto industry won't last long outside a regulatory framework. He reiterated that a number of cryptocurrencies can be deemed as securities and called on crypto trading platforms to register with the SEC. Nick Day, Managing Editor of Global Policy and Regulation, is here with us now to talk about this and some other stuff. Good morning, Nick. How you doing?
Hey, I'm good. How are you?
I'm doing well, hanging in there. So, yeah, we heard Gary Gensler says crypto should be asking for permission, not forgiveness. What gives, man? What's up with that?
I mean, I don't know that this is necessarily anything new, right? And even going back to Jay Clayton, Gary Gensler's predecessor, the SEC has always had a reach out to us if you have any kind of questions approach, at least one that they've publicly espoused. The whole FinHub division of the SEC is in fact meant to answer these questions if people are trying to launch some kind of a crypto product, whether that's a token or a new project, or if they have a startup that might at some point use a crypto token. The SEC has always had this position that you should reach out to them and ask them questions, get their permission, and basically get their kind of approval that they're not going to come after you for an enforcement action a couple years down the line.
So when former chair Jay Clayton left and Gary Gensler came in, there was broad excitement in the crypto industry that, hey, here's someone who gets it. Has there been anything to reflect a change in approach from the SEC under Gensler, or was that just sort of wishful thinking by the crypto industry that had grown tired of Clayton's tenure at the SEC?
I think it's a combination, but I wrote I want to say in the spring, but Gary Gensler knowing crypto doesn't necessarily mean he's going to enact a favorable crypto regulatory regime. And the actions and the statements he's made since then kind of indicated that what the SEC will do is have a more sophisticated approach to some of these issues. It's going to, DeFi being the biggest example. Maybe the SEC did not really publicly comment much on DeFi in the last year, but last couple of months, they're suddenly going all in. They're taking enforcement actions. They're calling companies, decentralized finance tech firms. It's much more, I don't want to say necessarily sophisticated is the right word, but it's, much more robust, much more advanced than what we saw, 4 years ago or even 3 years ago.
Hey, Nick, I heard those police sirens
coming for somebody. Yeah,
yeah,
watch out.
I heard those police sirens, and it reminded me something happened with Tether, right? Something with us, CoinDesk, and the courts. You got something to say about that?
Yeah. So yesterday, Tether filed a petition to stop the New York Attorney General's office from responding to a Freedom of Information Law request that I originally filed around 3 or 4 months ago. In that request, on behalf of CoinDesk, I asked for specifically the documents detailing Tether's reserve composition and, trying to verify that those are identical to what Tether's published since, based on comments that you made by Tether's general counsel, Stu Hoegner, that whatever they sent to the NYAG, they would publish to the public as well.
Yeah, those were things that they said they would publish. Did they ever give a timeline as to when they would publish, or they just said we're going to make it public at some point?
Well, they said they would make future filings public. So they have published, I think, 2 so far, and that seems to be in line with what they said, back in March. But the question I have is, we're in an industry where the big phrase is "don't trust, verify." Here's me trying to verify that what they're publishing is indeed identical to what they're sending the NYAG's office. And more importantly, that it's what they sent the NYAG's office over the past 2 years during the investigation into whether or not Tether misled its customers by, providing a loan to its sister company, Bitfinex.
Nick, there's also been some news from the NYDFS.
Yeah, so New York Governor Katie Hochul, who just took office in the last week, has nominated Adrian Harris, a professor and former economic advisor to former President Barack Obama, as the new head of the New York Department of Financial Services. And what's really kind of stood out to me is Miss Harris, or Professor Harris rather, has been a player in the crypto industry. She's an advisor on the board of directors to the Digital Dollar Project, headed up by former CFTC Chair Christian Carlo. And others, but she's also testified, I think, before Congress. So she is someone who has experience in the crypto industry, coming in to head one of the most important state financial regulators that has crypto ties.
Nick, thanks for being here, and thanks for all your hard work. Have a good day, okay?
Thank you. You too.
All right, that was Nick Day. He is CoinDesk's managing editor of global policy and regulation. Do not forget to sign up for Nick's The State of Crypto newsletter over on CoinDesk.com. All right, that's it for First Mover today. Thank you to my co-host, managing director of international content, Emily Parker, and Lawrence Lewitton, our managing editor of global capital markets. You guys are both great. I'm Zach Seward. Join us at noon on CoinDesk TV for The Hash and All About Bitcoin at 3 p.m. Eastern. You are watching CoinDesk TV, and you have a good one.